Hey there, everybody. Welcome to another eye opener. This is Market Wealth Daily's quick little video chats that we do with top traders. I am super excited, as always, because we got Keith Harwood here. And Keith, I want to talk to you about a bunch of stuff. There's a lot going on, but let's just jump right into the elephant in the room here. We talked about Delta last week, and you know, now it's just kind of hanging there. It's just kind of lingering. And this sets up an amazing conversation. This is the one
Yes.
that you get on these interviews and nobody likes to talk about this stuff and they avoid it. But it's a trade that's just not kind of doing what we thought. It's not horrible by any means, and it's still got time to play out. But I want to get your insight. I mean, this is something that you do all the time, every day. You've been, in the professional arena as a trader. Managing trades is just part of life and it's how it goes.
Yeah.
And if you don't know how to do that, you're really walking into a battle unarmed. So I want to give everybody a bunch of ammunition. So if we can jump on that, but I know you've got other things to show. I know that you're always looking for that next pick. So we got to get everybody engaged in that. And really quick, sorry, Keith, but
Yeah.
if anybody has any questions or anything, just go ahead and throw them in the chat. We are looking forward to seeing everybody. Carlo, my man, great to have you with us, my man. Oh yeah, our number one fan there. So just like Carlo did, if you have any questions, go ahead and type them right in the chat, and we'll try to get to uh, everybody's questions. But keep all right. So let's just jump in. I'm going to hand it off to you now.
Absolutely. Yeah. So we'll start with Delta. So, Delta, we talked about it last week. It looked like a really interesting setup. Looked like it was getting pretty explosive here. By the end of the week, it's unchanged, right? Not much shift here in Delta. It didn't get that big follow through that we were seeing from the AI predictions. Didn't, it tried. Don't get me wrong. It certainly tried, on Wednesday of last week. It was pushing on Tuesday. On Tuesday it opened unchanged and then pushed higher, and then Wednesday it pulled back and traded below the low of Tuesday. So then that goes from managing the exit on a profit side, is what it looked like we were looking for on Tuesday, to making sure that I had my defined risk to the downside and understanding when I'm giving up on this trade and saying, you know what, nobody has 100% winners. Nobody can predict a stock movement 100% of the time. If they did, they'd just sit quietly in a dark room, do it all day, every day, and make billions of dollars. But managing those losers, because, a good system might have 33% losers. So if you win 2 out of 3 times, you're generally going to be doing well, as long as those win rates are higher than the loss rates in terms of the return. So we had Delta pull back, started looking like maybe it could get back into that prior range prior to the gap on Monday morning. A little concerning. Didn't actually fill back down to the Friday high. That was a good sign for me. On Thursday, it started showing signs that this bottoming was in. And then we had a higher high and a higher low. Yesterday, a higher high and a higher low. So now it looks to me from a technical perspective like, oh yeah, push back to 53 range, 53 and a quarter. Looks like a natural target. May see some resistance there since it's rejected it now. But is this the best trade today? Maybe, maybe not. So yeah, it's a stock where, being in a position, it's very tempting to say, well, I see it going to 53 and a quarter, and I want to hold on to this to make sure that I get that win. That's not a bad trade given the current setup. It's not the best trade maybe out there, though. So there's a decision point that has to be made. A lot of times these trading opportunities, it's, I always compare it to dating versus getting married. Am I dating the stock, or am I marrying the stock? If I'm marrying the stock, it's an investment. If I'm dating the stock, it's a trade. Generally, I'm looking for trades here. Now, I'd look to manage this one out and say, if we get back towards 53 and a quarter, that's a pretty good, nice spot. And if we get back below Thursday's low, okay, take the small loss and move on. But if looking to free up capital to make more trades, then, there's no reason to necessarily say that this is better than any other trade out there right now. Just if wanting to keep that position and see how it pans out, that's kind of my target, is looking, okay, 53 looks like a pretty good target. That would be a profit. If we get below Thursday's low, small loss, and then move on. And I mean, when I go back to my my forecast toolbox for Delta, honestly, it says, expectation of slight positive here. Um, it's not showing anything particularly exciting for Delta for the next week. Last week it looked really potentially explosive on the growth. It's got a good model grade, which is good. So we have this model grade here, which tells us that it's like accuracy or expected accuracy should be pretty high here. Last week it was a little bit lower, and maybe I should have mentioned that. But at the end of the day, a non-losing or small loss is a good thing, and knowing how to take a small loss is better than turning a small loss into a big loss by fighting against the market. So for me,
Absolutely.
technicals
Absolutely.
technicals look like a little bit positive. The AI says pretty neutral. Would I add this trade today? No. Would I hold this trade if in it today? I mean, I can. No strong commitment to it, but it's not the best trade out there, but it's certainly not a bad trade. Um, we'll give it that because it's
Definitely.
got very well-defined risk from here. So
Yeah. So yeah, it really interesting to point out there. I think you made a great point. You got to take this. This is all about your personal trading style, right? And your
yeah,
asset allocation, your position sizing, what you're trying to do, and you got to make that call. If you
yeah,
see a better trade and you need the money that you got in this trade, get out, take the haircut,
exactly.
and jump into the other trade and get into the positive side again. You just can't get caught up in the mental aspect. The words win and loss have very significant mental baggage, and you have to shut that off as a trader. What you have to
Yeah, I
look
mean,
at is just the mathematics of it all.
right. I mean, the capital invested in a trade is more than just the money. It's also the mental capital. Am I going to be staring at a trade that's not doing anything for the next 2 weeks, with like a hope strategy, or do I want to be in something that's dynamically moving in my favor, building up capital, and then say, you know what, maybe Delta is going to be a great setup again next week when we're trading 54, push through that resistance point, and then setting up that move towards the 60 level. That'd be great. I can always come back to it later. There are opportunities out there, and I don't want to get myself attached to a single stock. When you're trading as like a market maker, like I was, I had to trade gold every day. I had to trade silver every day. And those were the stocks that or the commodities that I was married to. They were my trade. Now, on the retail side, I can trade whatever I want. If I don't want to trade in the airlines today, I don't have to be in Delta anymore. I can move on from this trade and say I'd rather be in AI names, or I'd rather be in financials, or I'd rather be in a retailer, something like that. So I think from a mental perspective, it's just important to recognize when something is taking up too much time relative to the potential reward, as well as recognizing when something takes up too much of my trading capital relative to the reward. With a universe of thousands of stocks out there, I don't want to stay hyper focused on one that's not doing anything great. It's not doing anything bad, but it's not doing anything great today.
Absolutely.
So,
Good advice. Yeah. Well, let's jump into what else you're looking at. I know you got your eyes on some other stuff
oh,
as well.
absolutely. Yeah. So, I mean, we talked about it a little bit yesterday, but of course, the US-China tariff negotiations going seemingly well started up the market, and then we continued to push higher. So, I wasn't 100% certain how high we were going to go here, but every day it seems like we go higher. We get a Moody's downgrade, start lower, close on the highs yesterday. Everything is going towards buy the dip mode. People are just not willing to let this break because there's not a real major bearish news. So the Moody's downgrade may have seemed like it could have been enough, but then people start saying, well, that's a lagging indicator. It's all about what's already happened. Now we have to worry about future growth and future expectations, and Moody's can't factor in future growth expectations as well as just the market. So the market was there. They bought it up. We pushed to new highs. So I just went right back and I said, you know what? All right. I got to go with the flow here. Fighting against a losing current, is not going to work for me. So I don't want to be bearish here. Where's the flow going and what looks really positive? So, I'm going to go back to what I did a couple of weeks ago and say, you know what, rather than trying to find some other, hidden gems, I'm going to go just straight to that paid system and say, we've got 4 trades today. I'm going to talk through one of them with you guys because one of them is a really good setup. And the ones we had last week, by the way, were Abbott Labs, which is ABT. And that was up, let's see, what was the stock price here? Yeah, so we had a little dip and then pushed to new highs. JP Morgan just continuing firm until yesterday. Their investor day was slightly bearish for the stock, but just been a really nice run. And then GE, which was a great trade, just has been marching higher. Now, that doesn't mean that those are the great trades for this week. Again, even though already having the profit and booking those profits, 70-ish% returns on each of the options trades, I don't want to necessarily just say, okay, well, Abbott worked last week, I got to do it again. Nope. I want to go back to my filters and say, what's the new trade for this week? And one of the trades that came up for us this week was in natural gas pipelines. And that's through Quanta Services, PWR, so power generation. And I looked at the chart and said, okay, what do I think about the chart here? We've done some nice work here. Gapped up on May 1st, consolidate. Break out, consolidate. Now pressing against the highs of that range. All right, now I'm seeing some interesting stuff technically. If we can push through some of these highs, it can really push up towards 360 maybe range. That's a really good return when you're dealing with an options market because PWR has very low implied volatility on a relative basis, and the options are very leveraged. So if I go out to just the June, say, 350 or 360 calls, I can greatly reduce the amount of capital needed to invest in a trade like this. A 350 call costs about $10. So it's $1,000. It's not a small investment for many people. It's not a small investment for most. 360 calls about $600, but it's a heck of a lot better than buying 100 shares for $35,000 in terms of the money I can make on this. I don't have to put a full 35 grand into having a 100 share position. The 350 calls replicate about a 50 share position at current prices into a rally. It would grow because of the way that options move. But I have the right but not the obligation to buy 100 shares for $350 if I buy this option. And so if I got in for, say, let's just say on a theoretical basis, about $10 and the stock rallies $10, I expect this to be about a 50% return. That's a nice little return on a small move on a $345 stock. We're talking about a 3% move can yield a 50% gain. Now, to make sure I'm doing my full due diligence, I always go back to the stock forecast toolbox just to make sure I like the way that they're setting up. And again, it's got a model grade of A, which tells me that I know that this has got a higher confidence in the AI system and that it's predicting well recently. It's had a higher accuracy. Today's trend up 1%. That's a third of the move I'm looking for already. And again, we're looking at a positive drift here with relatively reasonable ranges. I mean, if I get any part of this kind of rally with the potential for 3% or just a little bit less in the next week, a high around 360 around my price target, everything seems to be lining up here where this could be a very exciting trade return for about a week with a positive direction. Maybe it's not that crazy, like AI style parabolic move, but I don't have to find parabolic moves when the options are priced low. If I can find a trend, I can make a lot of money by catching the trend and expressing that trade in the right way. And, there are ways to reduce the cost, turning in a call debit spread, which would be like selling the 370 call above current market prices. That would reduce my expense by reducing it by $3.50 or $3.35 per contract. So reducing it by $335 total. There are ways to do that. I like to stick with the simplest, which is like a just straight up outright long call, but to each their own on it. And when people are looking at trades like this, I think that this is one of those ones that just makes a lot of sense. Testing those highs on a technical basis looks ready to break out. Has a good target range around 360. The AI says the same thing. All of this is just really lining up for me to make this one of the more exciting ones that we've got for this week on that paid system where we've got 4 new trade entries coming out this morning and, PWR happens to be one of them.
Yeah. I'll tell you, each of these calls that we go through, you just move through so many different things that are just, they have so much depth to them. And there's a couple that I want to circle back on. Your analysis of the 350 versus the 360 call. And so, when you're looking at an option, you're looking at the strike that you think is going to give you the best possible, value increase. So, 350, 360, we're right around 345, right? So you're figuring this is going to go up in the next 4 weeks, we're looking at what we're going to target that is going to get the biggest move. Now, it's important to understand if you're just starting in options trading, it doesn't have to hit 360 for it to pay out to you. What
Right.
you're looking for is this is the opportunity, not the obligation, to buy that stock at 360. So think of the contract that you're getting as a separate instrument from the stock itself, right?
Yeah.
Everybody ties those together. They get mentally connected to the stock price. Now you're looking at that contract, and over the next 4 weeks, there could be increased interest in this ticker, in this stock, and that could you know get people excited, and they think it doesn't have to go to 360. People just have to believe it is going to go to 360, and that increases the value of the contract. That gives you the
Yeah.
opportunity to buy it, right? So you can just use the contract. You don't have to execute these. So many people, when you're first starting out, they think, "Oh my gosh, I have to buy 100 shares and 30. I don't have 30. I can't do that." It's like, no, that's not the way it works, right? The
Right.
thing you do have to be mindful of in that case is you have to watch out for time decay. If it doesn't get to 360 as you get closer to expiration, the value of that option contract will rapidly decline. So,
Absolutely.
as a rule of thumb, and this is not universal, you're going to look at, a couple of weeks out, just to look for an exit strategy. We talked about the Delta trade, and it's just kind of down and flat. It might pop back up again. There's a good chance it could get a little bit of lift. That would be technically a losing trade right now. If you're sitting
Yes.
on it, you want to be mindful that I believe we're looking at a 620 expiration.
Yeah.
That clock's starting to tick a little bit louder now, and it's going to tick
Yeah.
louder and louder every day. And you're not going to want to wait till the end. The closer you get to that, the more urgent it is to take that loss, cut it, lock it in, and go on to the next trade. We're still
Right.
in the window where you can kind of watch. There's a possibility. Don't wait too long. Get out of that thing. And maybe keep at what point would it ever make sense to really execute that option? A lot of times the value gets built into the option contract, right?
Yeah. So you touched on a couple of things there. I mean, so 620 is a really good expiration date for me in the trading style that I use right now. And the reason that is just what you mentioned. I don't have to have the stock go to 360 in PWR or 55 in DAL today. I have a whole month for this to play out. So if I go to, in PWR as an example, if we go to 355 in the next 4 days, the 360 calls will appreciate in value, unless it's going to 355 on a takeover, which would be absolutely unlikely to have a 3% premium takeover. But if we go to 355 in the next, say, week, or 360 in the next week, these June 360 calls are not worth zero. They'd be worth zero if at expiration we're below 360. I've still got a full almost month at that point for it to potentially increase in value more, the stock that is, and thus the options continue to have value. And that's why these can be a good stock replacement, even though they're not deep in the money, which is a traditional stock replacement strategy. Now with like Delta, if the trade had been in, say, the May 23rd options, which expire this Friday, I'd be sweating a lot right now on like these 53 calls. I got resistance at 53. I'm not sure we can push through. If it takes a day, these may not even appreciate that much. The May 53 calls decay right now by about 14 cents per day. So that's about 20% of the value is going to decay automatically by the passage of time. So what kind of rally do I have to get to offset that? Really, I need a 50-cent rally on a 30 delta option to generate a 15-cent return. And then I lose 14 cents in theta. So if delta today goes up to 51.70, I broke even. That's not a great setup for me. And that's why I don't normally like to use these short-term options for too many trades. Every once in a while I do it when I'm looking for like a lottery ticket type trade is what I call them, because it's either going to work or it's not. And it's usually very binary for me. So it's like, I see something that could be explosive. It could give me a quadruple or more return if it works out perfectly. It's rare, but I know that I'm risking 100% of what I put into it. And Delta is a prime case of this. The June 20th calls didn't necessarily work for the week, but the value is pretty stable here because the stock is generally pretty stable. So yes, there was some loss of theta, but that really accelerates in the last 1 to 2 weeks of the contract. So yeah, for me, I mean, I think that this, like, having a little bit of extra time is a way to make sure that if we don't move exactly how my mind wants to picture, where I want to see the stock just go, oh yeah, it's moving a little bit, and then boom. It's just, you pick those every once in a while, but it's not always as easy as it seems in the mind's eye. So for me,
Not
getting
everything
that
in
little bit
not
of extra
everything
time
in
is great.
not everything in life is graceful, but a lot of times you end up where you wanted to get to. Just the path to get there is a little crazy, and it's
Exactly. I
very
mean, like
true with
ABT is a
stocks.
prime example of that as well. Last week we had the entry for the paid system. We bought in on Tuesday morning, so on the 13th, effectively the high of the day, closed lower, held support, and then reversed course and closed at the highs of the range. So over the 4-day window, it was great. 5-day window is great. But over that first 2 days, sweating a little bit, right? Approaching some support levels, maybe questioning whether to just take the small loss here. And then it turned into a 70% winner. So glad it didn't get exited, right? But having that extra time by
Yeah.
having June 20th expiration is what allowed us to stay in the trade. If I was using last week's expiration, I would have been looking at near 100% loss already by the morning. And it would have turned out the market would have been wrong to price the options that low come, Thursday morning when we spiked higher. But you don't know that for sure. And if we had stayed around 131, 132, the calls that we were in, they may have been about unchanged, but the 135 calls expiring last week, they would have been dead. At the end of the day, we closed at 134.80 on Friday. So the 135 calls expired worthless. Well, the June 135 calls were up 70%. So it's all about making sure you understand that time part matters, and being too short term on it because I want to see that move happen this week. Sure, the move may happen this week, but I would rather have a little more time on the option in case it moves a little less or a little later.
I think one of the things we'll talk about in the future is like when you're first starting out, some guardrails you can put up for yourself. That doesn't mean they're absolute and that they limit you, but there's some things you can do as a relatively new trader to kind of protect yourself a little bit from the unexpected and from what you don't know yet. As you get
Yeah,
more advanced, you can start to play around with those settings and you know uh, take a little bit more risk because you've watched things, you're a little bit more experienced. Picking an expiration date is a great example of that. As a newer trader, I would always take a little bit longer out
yes,
expiration and give that play that setup that you're seeing in your head a little bit more of a runway to take off and play out, but as a more experienced trader, to your point, you see some things in there, it's like, oh, I think I can Indiana Jones this and slide right under the closing door and grab my hat. It's like
yeah,
you
exactly.
can't always do that. You can't always do that as a new guy. You got to know all the parameters. So, but we'll definitely jump into that in the future. Awesome. Yeah, Keith,
Yeah,
this is great stuff.
yeah. And I want to touch on Carlo's question here. So Carlo, I think so. This is kind of the prime example of what we're talking about. If you've got a stock that maybe could go up towards, let's say, $31 this week, it appears that there should be some resistance there around 31, currently trading 30. If I think this is a bullish stock, there are two things that could become dangerous for me. If I bought into, say, you know, I imagine maybe it was the 33 calls for you. Two things that happen to me when I have trades that don't work by my expiration date. I get a little bit gun shy about re-entering the next week. I think that's just a trading psychology thing. Like, oh man, I thought it was going to be bullish. I had the 33s. I already lost on that. It's only 4 cents, but still there's a little psychological element that says, do I want to do it again? Am I ready for it again today? Is there that opportunity still? If the opportunity is still there, I probably should be looking at it. But if it doesn't pay off, one time, sometimes it can give me a little bit of hesitancy to get in the next time. And then the other thing is, of course, that if we stall at 31, 33 calls are going to expire worthless versus if I was out in, say, June, if we go up $1, I expect the $33 calls to appreciate in value. And actually right now we're getting too close to the open. So we've lost the previous bid and offer feed. It's going to cost more, so I don't get as much leverage. I don't get as many of the call options, but I have a higher probability of success. And getting that higher probability of success will reduce the expected percentage return on the stock trade or the options trade, but it helps balance it out. So as long as you're comfortable taking lottery trades and not having that impact the psychological part of the trade, knowing that you're going to lose, 99 out of 100 times, that's okay as long as that's already priced into the mental side of things. And as long as that 1 out of 100 more than pays for the 99 losers.
Well, that's just some great insight. Just kind of shows the value of these events and being able to have people right here with us be able to chime in and ask their questions. It's helpful both, for the audience to get answers, but I think it's helpful for you and I. I know for myself, it's great to have that perspective of a new trader or, a different trader, even an experienced different trader, and see the challenges that they're facing makes us look at things that we probably wouldn't even looked at before. So really grateful for the questions and really grateful for everybody taking the time. We are right up on the open, Keith. So I think we're going to wrap here,
Yeah,
and both of us are going to jump in and see what we can do today in this crazy market. But
absolutely.
hey,
Calming
hey,
crazy market.
yes, right, right. Well, hey, man, thanks so much for the time. As always,
Thank you.
greatly appreciate all the insight. We greatly appreciate all the tips and the advice. And we're going to be following this and keep an eye on it. And everybody, please watch the schedule. As always, we'll be sending information out in the follow-up emails that'll tell you what's coming next. And we'll be talking to you soon. Everybody, take care.
Thanks again.